Okay, so welcome everyone. We're going to start with the ECB press conference. We're basically going to start this video just as the ECB is going to start talking. I've got my markets all set up here. So just to make you very well aware, I've got Schatz here, Bubble, Buxel, Bund in the center right here, my Euro stocks here, DAX. This is my Euro USD, and these are my BTPs. So, Draghi's going to start speaking in the next, probably about the next minute. So just to give you guys a heads up, I'm going to be trading, as you saw in my trading plan, I'm going to be looking predominantly at the Euro stocks. So I'm going to be looking at the relationship between the Euro stocks and the DAX to see if there's any sort of paper coming in there. The Bund, I'm going to be looking at the relationship between the short end, the Schatz, the Bubble, and the long end, and then the periphery. And obviously the Euro is another one that I might be looking to trade. So, we're waiting for the ECB's Draghi to step into the conference room now. About 30 seconds until he gets going. So we're going to start this just as he gets in shortly. Do mind you that the Euro USD, for some reason, the market depth is a little bit weird, so we're not getting the full market depth. And when it trades in one direction, you're seeing the order book on one side and not the other. So that's going to be a little bit mishappy, but let's try and pay attention and focus to these other ladders here, the Bund and predominantly the Euro stocks as well.
Ladies and gentlemen, the Vice President and I are very pleased to welcome you to our press conference. Let me wish you all a Happy New Year.
So he seems like very upbeat. Usually
I would also like to take this opportunity to welcome Lithuania as the 19th country to adopt the euro as its currency.
When Draghi's quite upbeat, he's usually quite dovish.
Accordingly, Mr. Vasilauskas, the chairman of the board of Lietuvos Bankas, became a member of the Governing Council on January 1st, 2015.
I remember he starts talking about his analysis when he starts saying
Lithuania to
based
the
on
euro
our
area
regularly
on January
monetary
1st,
analysis.
2015 triggered a system under which
This is
national
just a
central
prologue
bank
here,
governors
nothing to
take
trade off.
turns holding voting rights on the Governing Council. The details on this rotation system are available on the ECB's website. We will now report on the outcome of today's meeting of the Governing Council, which was also attended by the
This is
Commission
where I
Vice
start
President,
taking a mental note.
Mr.
Bunds
Dombrovskis.
156.10, 32.82,
Based on
10.30,
our regular
6,
economic and monetary analysis,
16.19. Okay.
we conducted a thorough reassessment of the outlook for price developments and of the monetary stimulus achieved. As a result, the Governing Council took the following decisions.
Taking decisions. Okay.
First,
that the euro's already starting to go here.
it decided to launch an expanded asset purchase program
Clips coming into your stocks.
encompassing the existing purchase
he's
programs
announced the purchase
for
program.
asset-backed securities and covered bonds.
Euro's already starting to go
Under
here.
this expanded program, the combined monthly purchases of public and private sector securities will amount to 60 billion euros.
60 billions above what we expected.
They are
we're
intended
buying
to
the
be
high here.
carried out until end September 2016.
That's way
and
bigger than we
will,
expected.
In any case,
Way bigger.
be conducted
We're going to be buying in front of this
until we
2,000 lot
see
here,
a
32,
sustained
32.92.
adjustment
We haven't gotten filled
in
yet.
the path of inflation, which is
But that's
consistent
basically, we're using this guy's
with our
support
aim
here. That's basically
of
way bigger than we were expecting
achieving
here, guys. We were
inflation
expecting
rates below, but
something about
close to 2%
5
over
to
the
600
medium term.
billion. We're looking at something more along the lines of
In March
1.1 trillion
2015,
here.
the euro system will start to purchase
Okay.
euro-denominated investment-grade securities issued by euro area governments and agencies and European institutions in the securities
We're
market, in the
looking for
secondary
potential
markets.
areas to start scaling out here because we've
The purchases
gotten
of
along most of
securities
our
issued by
size
euro
here.
area
We're
governments
trying to get a little
and
bit out here
agencies
just ahead of this
will
big
be
offer.
based
We've gotten filled
on
almost
the
of it.
euro system national central bank's shares in the ECB's capital key.
Okay, it's according to capital key here, which we kind of knew.
Some additional eligibility criteria
But some big offer
will
stacked
be
here at
applied
17 and 18. We're going to
in
try
the
and get out in
case of
front of these
countries
guys.
under an
Okay, about
EU
10 lots in there.
IMF adjustment program. Second, the Governing Council decided to change the pricing
Okay, we're going to try
of
and
the
offer in front
6
of these guys.
remaining targeted longer-term refinancing operations, otherwise called TLTROs.
Got some big offers in
Accordingly,
here.
the interest rate applicable to future TLTRO operations will be equal to the rate on the Eurosystem's main refinancing operations prevailing at the time
Got some big
when
offers
each
here stacked
TLTRO
at
is
33
conducted,
19s. We're going to try and use
thereby
that as
removing the 10
interim
basis
resistance
point
here.
spread over the MRO rate that applied to the first 2 TLTROs. Third, in line with our forward guidance, we decided to keep the key ECB interest rates unchanged.
Okay, we're looking at just scale out of that position.
As
quickly.
regards
Just
the
a small little scalp
additional
off of
asset
that size.
purchases, the Governing Council retains control over all the design features
Notice
of the
there's a
program,
very big size here at
and the
33
ECB
19s
will
now.
coordinate
Someone's
the
really trying to
purchases,
sell this Euro stock
thereby
for some reason.
safeguarding the singleness of the Eurosystem's monetary policy. The Eurosystem will make use of decentralized implementation to mobilize its resources. With regard to the sharing
Here we go.
of hypothetical losses,
Sharing of losses here.
the Governing Council decided that purchases of securities of European institutions, which will be 12% of the additional asset purchases
12%.
and which will be purchased by the NCBs, will be subject to loss sharing.
12%
The
loss sharing.
rest of the NCB's additional asset purchases will not be subject to loss sharing.
That's very little.
The ECB
Very little
will
loss sharing.
hold 8%
We're gonna try
of
and
the
get short here.
additional asset purchases.
I feel that it could be a bit of a
This
risk off move,
implies
this.
that 20% of
We're
the
using
additional
this
asset
5,000 lot
purchases
here.
will be subject to a regime of risk sharing.
Notice I'm not getting very, very, very heavy on
Separate
size here.
press
Being a bit
releases
more
with
passive.
more detailed information
500 lot just
on the
lifted at
expanded asset
17s. It
purchase
got reloaded. I'm
program
going to
and
try
the
and sell some
pricing
more
of
here.
the TLTROs will be published this afternoon at 3:30 p.m.
Remember our scenario analysis,
Today's
guys.
monetary policy decision on
Yes, we've
additional
got
asset
Bigger
purchases
than expected size.
was
but
taken to
low
counter
risk
2
sharing.
unfavorable developments.
There's a very big seller here in
First,
Euro stocks.
inflation dynamics have continued to be weaker than expected. While the sharp fall in oil
Stock is
prices over
very
recent
clearly above these
months
3320s.
remains the
3321s.
dominant
That is the
factor
size,
driving
that is where we want
current
to stay involved.
headline inflation, the potential for second-round effects on wage and price setting has increased and could adversely affect medium-term price developments. This assessment is underpinned
Bonds
by
actually
a
trading
further
near their lows
fall
here.
in market-based measures of inflation expectations over all horizons. And the fact that most
That's
indicators
out
of
there.
actual or expected inflation stand at or close to their historical lows.
Okay, you can see
At the
there's a bit
same
of a
time,
distribution forming here. So
economic
there's
slack
a
in the
buyer
euro
stepping in
area
around these 33.7
remains sizable,
and 33.06s. Once
and
we start
money
getting
and
through
credit
here, like we
developments
just saw,
will
can hold an
continue
offer
to
below
be
there.
subdued.
There could be some more selling coming.
Second, while the monetary
So we're
policy
below there
measures
now.
adopted between June and
Remember,
September
the
last
buy area
year
that we were long before is
resulted in a
91,
material
92s.
improvement in
And we're gonna
terms of
try and
financial
actually cut
market
and reverse there because
prices,
we knew there was a big buyer
this
there.
was not the case for the quantitative results.
We'll take some of our
As
size
a
off here.
consequence, the prevailing
size
degree
off
of
here.
monetary accommodation
This is where
was
the big buyers stepped in
insufficient
before when
to
it looked to buy with
adequately
that guy.
address heightened risks of too prolonged a period of low inflation.
Notice we came back to that
Thus,
same area where
today,
the 2000 law
the
came in.
adoption of
And we
further
took a
balance
really
sheet
nice little
measures
bounce. Now we're
has
taking these
become
with the size off
warranted
'cause that we just
to
want a little
achieve
scalp.
our price stability objective, given that
Notice
the
the
key
fluctuations in
ECB
DAX here.
interest rates have reached their lower bound.
The seller stepping in at these
Looking ahead,
103.70s.
today's measures will decisively underpin the firm anchoring of medium to long-term inflation expectations.
Someone's
The
holding
sizable
the
increase
Eurostoxx up, but for
in
some
our
reason
balance
someone's
sheet
selling this
will
DAX really
further
aggressively.
ease the monetary policy stance.
Look at this 1,000 lot that's just stepped in on the
Particular
Eurostoxx. 1,700
financing
lot.
conditions for
Someone's looking to
firms
sell
and
this.
households in the euro area will continue to improve.
Another 2,000 lot at these 3,300s.
Moreover, today's decisions will support our forward guidance on the key ECB interest rates and reinforce the
Reloading as
fact
well there.
that there are significant and
taken
increasing differences in the monetary
Can't hold a
policy
bit above these
cycle
3,300s.
between major advanced economies. Taken together, these factors should strengthen demand, increase capacity utilization,
Seeing a bit of a risk
and
off move
support
here.
money and
Wow,
credit
big
growth,
move up into these 33
and thereby
40s.
contribute
Now that
to a return of inflation
Finding
rates
it difficult
towards
to hold a bit here.
2%.
If we get below these 91s, 90s, that's our indication.
Let
that
me
this
now
could be-
explain our assessment in greater
we
detail.
could actually see a bit of a sell-off.
Starting with
Everyone's bought this
economic
very
analysis.
aggressively, guys.
Real
Another seller stepping
GDP
in
in the
here.
euro area rose by
I'm
0.2%
going to try and
quarter
sell
to
in front of this
quarter
guy because he's actually
in the
looking
third
like he really
quarter
wants to get
of
some work done.
2014. The latest data and survey evidence point to continued moderate growth at the turn of the year.
The stop's very clearly just
Looking
above this
ahead,
guy. It seems like we can't
recent
get above
declines in oil
3,300.
prices have strengthened the basis
Slowly
for the
trying to make
economic
a move through
recovery
these
to
91s,
gain
92s.
momentum.
If we can get through there, there could be a
Lower oil
quick flush.
prices should support households' real
Remember,
disposable
everyone's
income
bought this very
and corporate
aggressively above this
profitability.
area. If that big buyer goes,
Domestic demand should also be further
Here we go, we're just gonna
supported
try
by
to
our
take out these
monetary
92s.
policy measures, the ongoing improvements in financial conditions, and the
Can't take
progress
them out
made
yet.
in fiscal consolidation and structural reforms.
try and scale out of this.
Furthermore, demand for exports should benefit from the global recovery.
If we get back below these 92s,
However,
I might add.
The euro area recovery is likely
Not
to
looking to stay too
continue
heavy
to
above
be
it.
dampened by high unemployment, sizable unutilized capacity, and the necessary
Notice how
balance
that,
sheet
that
adjustments
DAX
in the public
cannot get
and
above
private
these
sectors.
103.70s for some reason. Every time we get to this area,
The risks
just keeps
surrounding
finding
the
a
economic
seller.
outlook for the euro area remain on the downside, but should have diminished after today's monetary policy decisions
Still
and the
quite
continued
subdued.
fall in oil prices over recent weeks.
Bunds have found a little bit of a bid
According
here.
to Eurostat, euro area annual HICP inflation was
Look at
minus
this 30 lot here. Look at
0.2%
this 30 lot here
in
the DAX.
December
Sell right in front of this
2014
guy.
after plus 0.3% in November. This decline
Every time we
mainly
get to these
reflects a
103.70s,
sharp fall in energy price
Look,
inflation
just someone has
and,
lifted
to a lesser
16 lots.
extent, a decline in the
reloaded
annual
again.
rate of change in food prices. On the basis of current information,
Yeah, we're going to try and actually
and prevailing futures prices for oil
cover this 5
annual
There's stocks a little
HICP
bit to
inflation
upside. Look, notice.
is expected to remain very low or negative in the
Every time
months
we go up to
ahead.
this guy, he just keeps reloading it.
Such low inflation rates are unavoidable
370s.
in the short
Seller
term,
just keeps stepping in.
given the very recent
Okay, we're going to
the,
quickly
the
try and
recent very sharp fall
take
in
that
oil
out.
prices,
get back up here.
and
we'll sell
assuming
again.
that no significant correction will take place in the next few months. Supported by our monetary policy measures, the expected
Euros.
recovery in demand, and the assumption of a gradual
Actually quite
increase in
buoyant
oil
at the
prices in the period ahead, inflation rates are expected to increase gradually later in 2015 and in 2016.
Just a quick little scout
The Governing
there.
Council will continue to closely monitor
little
the
front runs
risks
here
to
and
the
there, you can
outlook
see.
for price developments over the medium term.
And notice every time we
In
get
this
up to these
context,
levels,
we will focus in particular
someone's
on
absorbing in
geopolitical
that previous
developments,
little region.
exchange
We had that
rate,
region between
and energy
06's
price
little
developments,
profile area.
and the
Someone's
pass-through
trying to
of our
absorb
monetary
just-
policy measures.
Just ahead of that area. Someone's obviously
Turning
trying to get a
to
little
the
bit of a short
monetary
position on here.
analysis, recent data indicate a pickup in underlying growth in broad money, that is to say M3,
Just
although
pay
it
attention to the
remains
size of
at
the
low
clips,
levels.
Pay attention to any sort of
The
reloading
annual
on the
growth
offer.
rate of M3 increased to 3.1% in November
Hold this-
2014,
if we hold this kind
up from
price action around these
2.5% in October, and a
want to
trough
probably attack
of
these 92s
0.8%
when he
in
wants.
April
Notice how the
2014.
euro is actually trying to find a bid here.
Annual growth
Hasn't-
in
hasn't traded near
M3
that
continues
low
to
for a
be
while.
supported by its most liquid components, with the narrow monetary aggregate M1 growing at an annual rate of 6.9% in November.
Yeah, the DAX is actually finding a bit of
The annual rate of change of loans to non-financial corporations remained weak at minus 1.3% in November 2014, compared with minus 1.6% in October, while continuing its gradual recovery from a trough of 3.2% in February 2014. On average, over recent months, net redemptions have moderated from the historically high levels recorded a year ago, and net lending flows turned slightly positive in November.
Trying to find a bit of a bid here.
In this respect, the January 2015 Bank Lending Survey indicates a further net easing of credit standards in the fourth quarter of 2014, with cross-country disparities decreasing in parallel with an increase in net demand for loans across all loan categories.
Everyone's long above this area.
Banks expect that
remember that
these
seller at
dynamics will continue
103.70s
in early 2015.
in the DAX. Look at the volume we've done every time
Despite
we got there. We
these
just kept reloading.
lending to non-financial corporations remains weak and continues to reflect the lagged relationship with the business cycle, credit risk,
pay attention to. Look at the euro, how it's trying to find a bit of a bid here.
and
The
the
euro
ongoing
starts finding a
adjustment
bid.
of financial and
The euro's
non-financial
finding a bit of a
sector
bid, and
balance sheets.
these equities might actually be able to find a bit of an
The
offer.
annual growth rate of loans to households was 0.7% in November, after
Bit of reloading there,
0.6% in
3301s.
October. Our
to
monetary
market.
policy
Can you
measures
hold it?
should support a further improvement in credit
The
flows.
euro's finding a bit of a bid here.
To sum up, a cross-check of the outcome of the economic analysis with the signals
Found a
coming
very
from
big
the
bid
monetary
here. So it
analysis
traded up from 30s
confirmed
up to 59s.
the need for further
Bit of a
monetary
risk-off theme
policy
building.
accommodation. All our monetary
Periphery
policy
is
measures
quite strong, though, which
should
is
provide
interesting.
support to the euro area recovery and bring inflation rates closer to levels
Towards
below
93s,
but close to
92s here.
2%.
We want to pay attention to this price action here, guys.
Monetary policy is focused on
Here we go, we're just
maintaining
taking the
price
92s
stability
out.
over the medium
We're
term,
getting aggressive.
and its
Just below those
accommodative
91s,
stance
92s, we want to
contributes
get
to
very, very
supporting
aggressive.
economic
Notice that
activity.
the DAX is picking up in speed here.
However,
Our
in
risk
order
is
to increase
really,
investment
really
activity, boost
just above
job
these 92s,
creation,
93s.
and raise productivity growth, other policy areas need to contribute decisively. In particular,
hold this
the
offer here? That's
determined
the question.
implementation of product
Can we
and
hold this
labor
offer
market reforms, as well as actions to improve the business environment for firms,
We're gonna
needs
scale
to
a little
gain
bit out of here. It
momentum
seems like we've
in
pulled
several
a bit above
countries.
93s. We want to pay attention to this guy.
It is crucial that structural reforms be implemented swiftly,
Now, we've just gone off
credibly,
93s, 92s
and
again.
effectively,
Okay, now we
as
want to get
this
involved
will
again.
not only increase the future sustainable growth in the euro
Can't hold a
area,
bit above there.
but will also raise
Someone
expectations
comes to
of
market now with a
higher
bit more
incomes
size.
and encourage firms to increase investment today and bring forward the economic activity.
So it's finding a bit of a difficult.
Fiscal policy should support the economic recovery while ensuring debt sustainability in compliance with the Stability and Growth Pact, which remains the anchor for
This
confidence.
risk closely. We're hovering over
All
the bid.
countries should use the available scope for a more growth-friendly composition of fiscal policies. Now we are at your disposal for questions.
Given we have a very full press conference today, can I please remind everyone to please stick to a maximum of
Get
2
out of here.
questions? And I'll start with Johanna Trick.
Can't hold that risk any longer. But if we get back below that area, I'm still looking to
Market
sell
News.
it.
Thank you very much. 2 questions. You said that you'll keep buying
Here we go again.
bonds until inflation is back on track.
See a bit more price
basically,
action, a bit more confirmation.
You have an open-ended
Bit of
program.
a thicker offer there.
Do you see anything in terms of a percentage of outstanding debt that you can buy before you start
120,
overly
130, there we go.
influencing price formation
That's a
on
bit more size
the
now.
secondary market?
I'm sorry, can you say it again? Do you see what?
Do you see that there might be a
Not being able to
maximum
lift
in
these
terms
prices
of the
here.
percentage on outstanding debt where you have to
Get
stop
involved,
buying
wanna get involved here.
before
You
you
can see
overly
as
impact
people
price
coming to market
formation
here,
as the
the more they
European
come
Court of
to market,
Justice
the more
suggested
they can force
that you
those
should
people
avoid.
that are long above here to cover.
My second question is on the risk sharing.
We've already taken a
could you
decent
perhaps
loser on that
explain
first
to
30
us
lot, but
why you
we're looking to
decided
run this one down to the lows here.
move away from your usual procedure of pooling all the risks?
Okay, we'll take a little bit out
And in
here.
the context of that, if I understood you correctly, for 8% of government
Little bit off
bonds,
here if we
the
can.
ECB will still pool
Wanna
the
wait
risk.
for a bit of a flush.
And I would understand that you make an exception for euro
So we've
area
taken off-
institutions, but why do
We've
you make
looked
an
for that
exception for
really
these
quick
8%
flow flush move between
of government bonds if
82s.
otherwise you
82s is our level.
decided it
Remember,
was wiser not to
we
share
got back
risk?
below that, and we
Thank
just
you
started
very
seeing a
much.
really decent flush to
You're
the
welcome.
downside.
Yes,
That's the importance of
indeed,
understanding
the
your
answer
key
to
levels.
the
That's
first
the
question,
importance of understanding
yes,
positioning
we
in the
will
market and
buy,
understanding where the key
we'll buy
players are taking
government
part.
debt
We
up
saw
to
those key
percentage
players taking part
that,
around the 92s, and look at the
will
bunds.
allow
We said
a
if we start
proper
seeing a risk-off move,
market price formation,
which look,
which
BTPs
therefore we have
aren't
two
trading
limits. The
at
first
their
one
highs.
is
They're
an
a little
issuer
bit
limit,
little
which
bit
is,
weaker than the buds.
30%.
That's probably because we're seeing a bit of a risk-off
33%.
theme here. So if
And
we can get back up
another
to
one
this
is an
area,
issue limit, which is
gonna try and sell
25%.
this again.
In other words, we won't buy more
scalp.
than 25% of each issue and not more than 33% of each issuer's debt. The 25% limit, by the way, is the one foreseen in order not to be a blocking minority in the collective action clause assemblies, basically bondholders assemblies, and it's the basis for saying, for us to be able
nothing
to
really
say
looking
that it's
spot
going to
right
be
now
pari
on the order
passu.
books. Nothing much to look at. We try and stay back and wait for those
first of all,
opportunities like a
let me say I
sniper,
was
like a
surprised
predator.
that this risk-sharing
don't
issue
wanna be
became almost the most important thing
Just
about our
trading for the
monetary
sake of
policy
it. We've
decisions
made some
today.
decent money on the first trades. We went according
In
to our
fact,
plan.
it shouldn't be
Now
so.
it's more about
Let me
scalping, more about
explain
staying close
how
here,
we
keeping
reached
your money
the
close to you,
percentage of 20%.
just finding some small opportunities to scalp some
And
money
what
out
are
of the
the
market because you could see there's
reasoning,
there's
what is the
volatility. You
reasoning
could see there's
behind
good volume.
this decision. First of all, let me start saying that each monetary policy operation always has some fiscal implication. And for the central bank, what matters first and foremost is that monetary policy be effective, and then it takes into account these implications,
500 lots sitting
but
at
without
156,
prejudice for the
156,
monetary policy
76 here on the buns.
effectiveness. Now, usually these fiscal implications are dealt easily within one country
We're driving the
framework
market a little bit higher here.
between the central bank and the treasury. But in the euro area, there is no
That's the short
European
end of the
treasury,
curve. Bubbles very, very well bid.
and each national treasury gives an implicit or
Shots.
explicit indemnity to its own central bank.
Pretty well
but
bid,
not
but
to
a
the
little bit
euro
off its
system as a
highs. The
whole.
Booksul, on the other hand,
So the
pretty
question on
far off
how
its
to
highs.
allocate risks in the euro area
So yeah,
has been with the Governing Council since the very
interesting
beginning.
dynamic there.
There is a combined
I'm gonna watch the
ruling
Booksul, 'cause if the
coming
Booksul
from
finds
the
an offer
statutes of the ECB
that's
and from a Governing Council
potentially showing that
decision
there's some inflation
that the
expectations being
default
baked in,
mode is a
or
full
higher inflation
risk-sharing
expectations. At the
mode.
minute, we're not really seeing that.
However, the Governing
The
Council
whole curve seems
is
to be quite strong.
also free to decide what it deems more appropriate according to the circumstances.
Okay,
Now,
this is
it's
around
not the
the
first
area we
time
wanna
the
be paying
Governing Council
attention
has
to.
used this discretion. Let me give you a few examples. Originally,
I wanna be able to just
in the
scalp
early
this low
times,
level
there
here.
were two lists of collateral. One risk shared,
See, that's just very
one,
quick
the
scalp,
risk of
guys. We
which
knew
was
our level. We
shared,
came up to
the
our
so-called tier
level.
1, and
Some
one
sellers step in. We
where
just
the
take a
risk
few
was not
ticks.
shared,
It's just
and that's tier
literally
2.
trying to build
The
on top
additional
of the
credit
profits we've made
claims
so far.
decision we took
Okay, so this I
about
think
a bit 2
after
years
this
ago
stage kind
was
of
on a
quiets
no
down a little bit,
risk-sharing
but you
basis.
could see what's happened.
There are other examples
And
where
I'll
we
just lower
actually use the
Draghi
full
now
risk
for now because
sharing.
he's
For
talking.
example,
He's got the
the
Q&A
Dutch
going
Central
on.
Bank was
So we heard
indemnified for some small losses based
we
on
heard at
foolish
around
the Luxembourg Central Bank was
140.
indemnified
If you look
for
back on your Reuters, you
Icelandic
can look back on
banks
Reuters or Bloomberg and actually
when
check when
remember
these
there was
announcement came
mistrials
out.
on a full risk sharing,
Around
and
140,
he raised the buffers on the full risk sharing
the press conference
for
started a
some
little bit late.
potential losses
Around
that
140 in about
German
17
authorities
seconds,
might
he
have
announced
into
they're going to
the
be doing an
crisis.
expanded asset purchase program. That's when we
So,
started seeing some
there's
size
a
come into the
history
market.
that shows
Then,
multiple
at
decisions.
140 and 34
Let me
seconds,
add, this has nothing to do
just
with the
17 seconds
singleness
after that, he starts
of,
saying
the
that
monetary
the pace is going to be
policy,
60 billion, and we already
because
started seeing some
decisions
pricing
are
for
being
50
taken
billion, so
by
it was
the
already a little
Governing
bit higher than
Council
expected. Some more buying
with
started
the
coming to the
euro area
market,
focus, as I
and
just
then he
said
told us the
already
big
in
one.
the
It's going to last
introductory
until the
statement.
end of September
And so the
2016,
same is
which
true for
at
sovereign
that
bonds.
pace and for that long, so
Modalities,
we've
the
got basically
amounts, the
17
rules,
months,
the limits that I
16,
just
17
asked me
months off the
about
top of my
will be
head,
decided
and
here
you're
in
working at
Frankfurt.
60 billion euros. I mean, it's a
So
pace
the
that's
Governing
going to take
Council is
us
the
to
sole decision
over a
maker,
trillion, which is,
and decisions
beyond
are
the
meant
higher
to affect
expectations that we were
monetary and
expecting.
financial
So
conditions
at this
across the
stage,
whole euro area.
at this kind of in this
So,
kind of scenario, we
in
had it in
this
our
way,
plans. We
this
were going to
time
be very
we
aggressive
had
to
a
buy the euro stocks,
situation where the
buy the
problem
risk
is
assets,
very large. In this
and then
sense, it's
we're
different
waiting
from
for
the
the
S&P, for
announcement on
example.
risk sharing. And when the
It's
announcement on
very
risk sharing
large.
came out, which was very low risk
And
sharing, we
so,
started seeing a
on
bit
one
of
hand,
an
we
offer
wanted
come
to
into the
be
market. And notice the
wanted to
price
be
action
the
gave you everything,
principal
guys. You could see it.
of
There was a
the
huge
risk
seller on the euro
sharing
stock stacked up at the
in
highs of the
place,
day.
and that's
I mean,
why we
had you been
retained
trading on
20%
an
share
IG index or
until the
CMC
beginning
markets,
of
would you have seen that
January.
offer? Would you have seen that much
On the
size
other, we wanted
willing
to
to
take a
come to
decision
market
that
and
would mitigate
sell?
the
Well,
concerns
no, you wouldn't
and
have. So this is the
negatives
advantage of
that
trading on a
countries
price
in the
ladder,
euro
guys.
area
And
had
I hope at this stage
about
you
the
can really
unintended fiscal
realize the power of
consequences
this
of
platform.
potential
It's incredible when
developments
you're
in
trading
the
these kind
future.
of events and you've got a plan
But
and you
also,
can
let me
see the
define
size. It gives you an
final
edge. That's
consideration
where you have an
is
edge.
risk sharing or no
Um,
risk
so
sharing,
yeah,
a
hopefully you guys
fundamental decision
took that
as
on
far
well.
as
You
the
understood,
effectiveness of this
you know,
decision is concerned.
most of what I've said. I know I was talking over Draghi for the majority of the time, and I did lower him a little bit at the end, but hopefully you guys got the majority of what I was trying to say. The most important thing is understanding which setups you're going to be aggressive on and which setups you're going to be a little bit more passive on, and wait for the price action to confirm it. As you can see here, guys, the bunds, we did say in the scenario of a less risk sharing, the core bond markets are going to outperform the periphery. And notice the periphery is trading towards the high of the day, but not really moving as high as the bunds. The core markets are actually bidding up way more than the periphery. So more or less, this has gone according to the plan. And I know obviously I did trade this on the replay environment, but that plan that I'd shown you was the plan that I had on the ECB day when I was trading that. So that had not changed. And not only myself, but a lot of the traders on the floor had some of their best days ever, because when you prep for these kind of situations and when you've got the right scenario analysis, you can really push yourself to make your best month or even your best year. You can make a whole year on some of these days. So I hope you guys have really seen the power of trading these kind of events with the right sort of plan. So yeah, thank you guys very much for listening, and stay tuned for more. Bye-bye for now.